Living off dividends has long been the dream of financially independent investors, earning passive income while preserving wealth. But in 2025, markets are more unpredictable, inflation remains stubborn, and dividend reliability has become a true test of financial wisdom. This year's successful investors are not chasing the highest yields, they're building balance, sustainability, and protection. Here's how you can live off dividends safely in 2025 without risking the foundation of your financial future. 10. Prioritize dividend stability over high yield. A high dividend yield can be tempting, but it's often a red flag, signaling underlying financial strain. The safest approach focuses on consistency companies with long histories of stable or rising payouts. Investors in 2025 are turning toward blue-chip stocks and dividend aristocrats with proven resilience through recessions. These firms may not offer flashy returns, but their steady performance ensures sustainability. 9. Diversify across sectors and regions. Dependence on one sector or country can expose dividend income to sudden risks. Savvy investors spread holdings across industries like utilities, healthcare, consumer staples, and global markets. Geographic diversification shields against regional economic shocks or policy changes. This balanced structure helps maintain income flow even when one segment struggles. In 2025, global diversification is not just smart, it's essential for stability. 8. Use dividend ETFs for simplicity and scale. Dividend-focused exchange-traded funds have become a favorite for hands-free diversification. They pool stable dividend-paying companies, giving exposure to dozens of reliable performers. These ETFs automatically rebalance, maintaining an optimal blend of sectors and yields. They also reduce company-specific risk, making them ideal for long-term investors who prefer simplicity. For retirees or busy professionals, dividend ETFs are the bridge between consistent income and stress-free investing, offering both diversification and ease of management in one package. 7. Reinvest dividends early, then transition to withdrawals. In the early stages, reinvesting dividends helps compound growth faster. Each reinvested payout buys more shares, creating a snowball effect. Once your portfolio reaches maturity, often in retirement, you can switch to withdrawals for income. This transition strategy balances growth and cash flow without depleting principal too early. Many 2025 investors use hybrid plans, reinvesting part of their dividends while drawing from the rest to sustain long-term portfolio health and avoid the risk of running out of funds later in life. 6. Balance dividend stocks with defensive assets. Even reliable dividend stocks face market downturns. To reduce volatility, investors combine them with defensive assets like bonds, cash reserves, or gold. This buffer protects income during stock market declines and ensures liquidity for emergencies. Defensive assets don't just stabilize returns, they give emotional comfort when markets swing. In 2025, a portfolio that blends income with safety is outperforming those chasing only yield. 5. Focus on companies with strong cash flow. The best dividend payers are not always the biggest. They're the ones generating strong, consistent cash flow. Companies with solid free cash flow can sustain and even raise dividends during tough markets. In 2025, financial experts emphasize studying balance sheets and payout ratios before investing. Firms that cover dividends comfortably without excessive borrowing are far safer long-term. Cash flow is the heartbeat of dividend investing. When it's strong and steady, your income remains dependable regardless of market turbulence. 4. Guard against dividend cuts. One of the biggest risks dividend investors face is unexpected cuts. To avoid this, keep an eye on payout ratios and debt levels. If a company pays out more than 80% of its earnings, future payments might be at risk. Diversifying across several dividend payers cushions the impact of one company's reduction. Historical data shows that firms with consistent, conservative payout policies outperform over time. The key is vigilance. Regular portfolio reviews can catch warning signs before they hurt your income stream. 3. Adjust withdrawals for inflation. Living off dividends safely requires adapting to inflation's quiet erosion of purchasing power. Instead of withdrawing a fixed amount, tie withdrawals to inflation trends. This ensures your income keeps pace with rising costs. Inflation-protected assets like Treasury inflation-protected securities, TIPS, can supplement dividend income. Professionals in 2025 use flexible withdrawal strategies, taking slightly less during downturns and more in strong years to maintain balance. Inflation may be persistent, but smart adjustments preserve both income and longevity. 2. Keep a cash buffer for flexibility. A cash reserve is the safety net every dividend investor needs. Markets fluctuate, and having several months of expenses in cash prevents panic selling during dips. This cushion also gives you freedom to wait for dividend reinvestments or rebalance at the right moment. Experts recommend holding 6 to 12 months of living expenses in liquid savings. A solid cash buffer transforms dividend investing from stressful dependence to a confident, predictable income strategy that endures market turbulence gracefully. 1. Review and rebalance regularly. Even the strongest dividend portfolios need maintenance. Rebalancing ensures your asset allocation stays aligned with your goals. Over time, some sectors outperform, skewing your portfolio and increasing risk. By trimming gains and reinvesting in lagging but solid performers, you maintain healthy balance. A quarterly or biannual review keeps your income consistent and your capital protected. Living off dividends safely is not a one-time setup. It's an evolving process that rewards patience, discipline, and attention to detail. Living off dividends in 2025 is less about chasing returns and more about preserving stability. The key is patience, diversification, and consistency, building income streams that last for decades. Remember, true wealth is freedom that endures through every market cycle. If this guide helped you understand how to live off dividends safely, make sure to like the video, share it with fellow investors, and subscribe for more smart, sustainable strategies that help your money work